Hello everyone, welcome to JAIIB CIB Prep. In today's video, we are going to cover unit number 3, Operational Aspects of KYC. In this particular unit, we'll cover what are the KYC norms, what is a wire transfer, obligation of banks, some other operations, central KYC record registry, monitoring of transaction, what is a suspicious transaction. We are going to see some questions as well. So without further ado, let's begin our session. So PMLA and PMLR, the Prevention of Money Laundering Act, Prevention of Money Laundering rules. So these are the rules that helps to stop money laundering. That is turning black money into white. We have discussed it in detail in our unit number 2. Uh, all financial institutions like banks, NBFCs, they must follow these rules. The RBI in this direction has issued detailed rules called KYC Directions 2016 to guide banks and financial institutions on what to do. Now, what if a bank has branches outside India? For this particular scenario, RBI rules states that every branches outside India must follow these rules if local laws allow. Now, if there is a difference between RBI rules and the foreign country's rule, then the branch must follow the stricter rule. For example, if RBI says that PAN card has to be obtained and the foreign country said there is no need to obtain the PAN card, then the bank should obtain the PAN card. So, the bank has to follow the stricter regulation, right? What is KYC and KYC norms? So, KYC means a bank must know who the customer is, what they do, and why they are opening the account. We'll begin with customer acceptance policy. So, these are the rules whether to accept or reject a customer. And bank must not open an account when the name is fake, like Mr. X or someone else name, like in Benami. So if it's anonymous or it's a Benami name, then in that case, bank should not open the account. If the person is not cooperating or he or she is giving fake documents, if the person refuses to follow due procedure, if the person is trying to act for someone else without a clear legal reason, if the person name is in RBI's blacklist or sanction list, I hope you recall sanction list from unit number 2. If the PAN card is not verifiable, if the person gives e-documents without valid digital signatures, and if the person does not give the required information for KYC, in that case, the bank must not open an account. And what if it's a joint account? In that particular scenario, KYC is needed for all the holders. And it is important that even poor or socially weak people should not be denied an account just because they don't have all the documents, and we'll see it in the later part of this unit. Also, if an existing customer fails to follow KYC rules, the bank can close the account after giving him a proper notice. Now, let's talk about customer identification procedure. It is to identify who the customer really is. For example, I say I'm Mr. X. Oh, is it really I'm Mr. X, or I'm pretending to be someone else? Now, when this should be done, when the customer identification procedure should be done by the banks. So, when opening a new account, if a non-customer is sending money abroad your bank, using your bank, so he's remittance, he's remitting the money abroad. If there's a doubt about an existing customer's identity when selling any financial product worth more than 50,000, or if a customer walks in and does a transaction of over 50,000, or if the customer is trying to split big transactions into small ones to avoid limits, more particularly known as structuring. For example, say I walk in to the bank and I come thrice a day and deposit 49,000 each time. So what am I doing in this particular scenario? I'm structuring my transactions that they don't exceed 50,000 in order to avoid KYC, and this looks suspicious. So the bank should take proper precautions in this scenario. Also, if another agent or third party is doing KYC on behalf of bank, the bank is still responsible for the errors. Now let's talk about customer due diligence. So what is customer due diligence? So dear bankers, this goes one step deeper than identification. Is not just who are you. You are asking where do you live, what work do you do, how will you use this particular bank account, what services will you avail, and depending on the risk level, the information is gathered. So whether the customer is low risk, medium risk, or high risk, as discussed in unit 2, we gather more information like income source, business type, location, expected transaction background, so on and so forth. Let's talk about individuals, KYC for individuals who need to submit KYC documents. So people who are opening account, beneficial owners, authorized signatories, and power of attorney holders, they are required to submit KYC documents. And what documents are needed? So official valid documents are required. There are 6 official valid documents, 6 OVDs. Let me erase and write it again. So there are 6 OVDs. What are they? It's important for you to know these OVDs. So number 1, Aadhaar number. So Aadhaar card is officially valid document. Number 2, passport. Number 3, driving license. 4, voter ID. 5th is Narega job card signed by government official, and 6th is NPR letter with name and the address. So a question might come in your exam asking whether PAN is an OVD or not. So PAN is not an officially valid document. And if Aadhaar or OVD is not provided, then we are required as a bank to obtain certified photocopy of original documents, recent photograph if it's not an e-document, PAN card of form number 60, and other documents as needed. Now a question might come into your mind about so what about NRIs or PIOs? So for non-resident Indians or person of Indian origin, the document must be certified by Indian Embassy, Indian Consulate, overseas branches of Indian banks, notary public, judges, or magistrate. And what if the address is not updated? So in that scenario, you can temporarily give a customer can temporarily give proof of address. So utility bills can be given as proof of address, and it has to make sure that they are not older than 2 months. Property tax receipt, pension orders with address, or employer's accommodation letter, or leave and license agreement can be provided. But one thing has to be kept in mind that within 3 months, you must give a document that shows updated permanent address. When I say you, it means the customer. So within 3 months, the customer must give a document that shows updated permanent address. And what about name change? Name can be changed after marriage or for any other reason. So we need to obtain old OVD, officially valid document, plus marriage certificate or gazetted notification to prove name change. Now let's talk about rules for using Aadhaar for KYC. So consent is a must. Aadhaar can only be used if the customer gives you prior written permission. Say I go to a bank account, open an account, the bank can use my Aadhaar details only when I give my consent. Masking of Aadhaar, bank must store only the last 4 digits of Aadhaar. The rest should be hidden or covered. Say my Aadhaar number is 123456789101. So, so this is my Aadhaar number. So a bank can only store this number, the last 4 digits, and the rest will be masked. So this much information will be stored by the bank. And if someone wants to get subsidy or benefit from a government scheme, they must do biometric Aadhaar verification. If it's not possible due to illness or injury, Aadhaar can be verified online, offline, or another valid document can be submitted. The official's name who approved this must be recorded. If a person chooses to use Aadhaar for identification, bank can use either eKYC or offline Aadhaar verification, and only financial institution authorized by UIDAI can do eKYC. Keep that in mind. What if there are different there is a different current address? So if the customer presents address that is different from Aadhaar, a self declaration is required. Say Aadhaar has a Delhi address, but you live in Mumbai now, so you can give a signed statement with your current Mumbai address. OTP based eKYC. This is basically non face to face customers using OTP based Aadhaar eKYC. When Aadhaar eKYC is done using OTP, the bank account is opened without meeting the customer in person, and hence there are some limits for non face to face accounts. Number one, there is a balance limit, so you cannot keep more than 1 lakh in total across all such accounts. If it exceeds, the account will freeze until you submit a proper ID proof. And number two, credit limit. Total money received in a year cannot be more than 2 lakhs. Number three, loan limit. Only small term loans allowed. So it is up to 60,000. Time limit for these accounts is for 1 year. So within this time, proper KYC must be completed. If not, deposit account will be closed and no further loan money will be disbursed. And there is a one account rule. Customer must declare they don't and won't open another account using the same OTP based Aadhaar method elsewhere. Now let's talk about some different entities now. So KYC for sole proprietorship firm. First, verify the identity of the individual proprietor in a similar fashion which we use for an individual. Then you are required to take any two of these documents. So, sole proprietorship firm can submit any two documents from this list. So, it can be registration certificate, GST certificate, so municipal license, municipal trade license, import exporter code, income tax return, professional license, full income tax return, not just acknowledgement, utility bill like electricity, water, phone bill. And what if two documents are not available? In that case, bank can accept just one, but must verify on field that the businesses really exist at the given address. And for company, the documents needed are certificate of incorporation, PAN card, memorandum of association, article of association, board resolution authorizing someone to operate, KYC of people authorized to act like managers. For partnership firm, if it is registered, then you require registration certificate, partnership deed, PAN card, and KYC of partners and authorized persons. For trust, we require trust deed, registration certificate, PAN, or alternatively form number 60, and KYC of trustee and beneficiaries. For unregistered associations, we required resolution of managing body, PAN form number 60, power of attorney, KYC of members, and proof of legal existence. For other legal entities like universities or panchayats, we require the name and authority letter for representatives. We need KYC of person transacting and proof of legal existence. Now let's understand who is a beneficial owner. We have also discussed in it unit number 1 and 2. If you are able to recall, so a beneficial owner, dear, is nothing but the real person who enjoys the benefit or control, even if the account is in someone else's name. So beneficial owner is basically a person controlling or benefiting from an entity. How will you identify beneficial owners? In case of company, if a person has more than 25% of share or he or she controls company's management, then he or she is a beneficial owner. And for partnership, trust and association, if anyone is holding more than 15% or more shares or interest, or anyone controls decision, then he or she is a beneficial owner. Now, what if no one meets the criteria? then in that scenario, the person in senior management is treated as the beneficial owner. Let's talk about enhanced due diligence. EDD means you are doing extra checks when there's high risk in opening or operating a bank account. So for non-face-to-face customers which you have not met in person, where the bank does not meet the customer face-to-face during KYC process, extra care has to be done. It must be taken. So the first payment must come from a KYC compliant account the customer already has with another regulated financial institution. For example, if Raj opens an account online from Delhi, he never visits the bank branch. His first deposit must come from his account, which is already KYC verified. For politically exposed person, so these are the person holding important uh, political or government roles. They are considered as high risk customers. So only senior officials in the bank can approve such accounts. Bank must check online or public information are available about these persons. Bank must ask about the source of money, and same checks apply if a PEP owns a company even indirectly. So same checks and balances are applicable. So if someone in India wants to open an account and say his uncle is a former foreign minister of another country, then the bank will treat this as a high risk case. For accounts opened by professional intermediaries, these are accounts opened by professionals on behalf of client. There are certain rules which need to be followed. For single client, bank must identify the client. If there are separate sub accounts, each client identity must be known. For pool account, identify beneficial owners. If funds are commingled, they can be allowed like mutual funds. If intermediaries who can't share client details say that the client details are confidential and that's why we are not able to share the details of my client, then the account will not be opened. These kind of accounts will not be entertained. If money is mixed in one account, you try to identify the real owner, and if the intermediary is regulated and trustworthy, the bank can rely on their KYC. But the final responsibility again falls on the shoulder of the banks. Now, we have seen enhanced due diligence. Let's also talk about simplified due diligence. So these are the relaxed rules for certain types of low risk accounts. Number one, self-help groups. Savings account. In savings account, you do not need to do KYC of all the members. Customer due diligence of only office bearers is applicable, but for loan accounts, KYC has to be obtained for all the members. Say there is a self-help group of 10 people, they open a savings account and only two are office bearers. So only two office bearers documents are required. For foreign students, we are required to open an NRO account. They need to give us their passport, visa, photograph, and college admission letter. Within 30 days, uh, we are required to obtain the local Indian address and it must be verified. We can receive foreign money up to 1000 US dollar or 50,000 rupees till the local address is confirmed. And for Pakistani students, prior RBI approval is required. Sorry. For foreign portfolio investors, if they are registered with SEBI, bank can open accounts with specified documents. They must comply with FATCA or CRS tax rules, and an undertaking is required that exempt documents will be submitted if required. Small accounts, for people who do not have official valid documents. Say there is a marginal labor and he does not possesses any official valid document. So will he be deprived of opening a bank account? So answer is no. For these people, we can open small account. So these are basic accounts opened using just photograph and a declaration, and they must be signed in front of bank officer. But again, there are some limits. There are certain restrictions. Uh, Annual credit should not exceed 1 lakh rupees. Withdrawal in a month can go up to 10,000, not more than that. And balance is permitted to be maintained maximum up to rupees 50,000, and there's no foreign remittances allowed. Now the customer must submit valid ID within 12 months, else account may be frozen. For example, a migrant worker without any ID opens a small savings account. He provides a photograph and signs in front of bank officer. So he can only deposit up to 1 lakh rupees till he gives his Aadhaar or any other official valid document. Customer level KYC and monitoring. Each customer should have only one identity in the bank. So a unique customer identification code is given to track all the loans, uh, all the accounts or credit cards, etc. So this UCIC helps prevent money laundering and makes KYC easier. Walk-in customers like those buying gift card may not need UCIC unless they do frequent transactions. Say if Priya has a savings account and later takes a loan, the bank should link both the accounts to same unique customer identification code. UCIC is optional unless they come often for walk-in customers. Periodic KYC updation. Customer info changes over time. Say there's a job change, customer move to a new address, so bank must update KYC periodically. Frequency depends on the risk of the customer. For low frequency, KYC needs to be done in 10 years. For medium, it is 8 years, and for high risk, it is only 2 years. So every 2 years, you are required to do periodic KYC updation for high risk customer, 8 for medium risk, and 10 for low risk. For individual, if there is no change, then just a self declaration is required. If they change an address, then take self declaration and verify the address. And if a minor turns major, you are required to take fresh photograph and verify KYC documents again. And for businesses, if there is no change, you get a letter and board resolution confirming that there are no changes. And if there is any change, then fresh KYC is required as if it's a new customer. There are some other rules. You need to replace expired documents. You need to revalidate PAN details. You give acknowledgement receipt to customers, make KYC updates available at any branch, and use risk-based approach. Higher the risk, more frequent the checks, and you avoid unnecessary harassment of the customer. PAN and Form 60 requirement for existing customer. If the customer has not given PAN or Form 60, bank must get it by government specified date. If not, account operations may stop temporarily after warning. No withdrawals will be allowed, and deposits also stopped for savings account. Uh, Say Raj has not given his PAN, the bank gives a deadline. If he misses it, the account is frozen temporarily. Now, what is customer due diligence? And then we'll move on to alternate methods. So, what is CDD? Customer due diligence means verifying who the customer is to prevent fraud, money laundering, and illegal activities. So, what are why alternate modes are required? So, bank have to do CDD for every customer, but sometimes there are too many customers and some customer lives in faraway or rural areas. So to make things easier, RBI allows bank to use alternate methods like CDD by third party, video based customer verification, digital KYC, eKYC using Aadhaar, and let's talk about uh, each of them. Number one, CDD by third party. Basically, you are taking the help from third party, so bank can rely on another trusted entity like another regulated entity or financial institution to do CDD on its behalf. But again, there are some conditions attached to it. Banks must get the CDD info within 2 days from the third party. If bank asks for document later, the third party should give them quickly, and the third party must be regulated, must follow proper CDD rules, and they should not be located in a high risk country. Obviously, the final responsibility lies with whom? It lies with bank uh, using the customer. So say bank A opens a new account for a customer by using already collected information by bank B. So provided bank B is trusted and share those documents promptly. But in this scenario, the responsibility lies with bank A. Number two, video based customer identification. Banks can now verify customer identity by doing a video call instead of asking the customer to come to the branch. It is used mainly for opening a new account, updating KYC if the KYC is outdated, and converting accounts opened without face-to-face KYC. Again, some infrastructure is required, like bank must use its own secured systems and networks. Bank data and video should be encrypted, and it is stored in India. Our video should include geolocation, GPS, and time stamping. Face detection and matching technology should be available, and there's no video call from outside India. Now, how does this work? A bank official takes you to video call. You meaning to say the customer. Bank official asks the questions in different order each time to avoid fraud. Customer shows the OBD, the Aadhaar card, the PAN, and answers certain questions. If someone is coaching the customer in background, the process will be rejected. But the bank may use officials or banking correspondents to help the customer. Say a customer lives in a remote area, so instead of traveling to a branch which might be, let's say, 50 or 100 kilometers away from his village, the customer can complete the KYC through a secure video call with a bank official by showing the Aadhaar and answering a few questions. Digital KYC. This is a digital method, but the bank official still meets the customer in person, either at the branch or at the home. So, bank develops an app to be used by its staff or business correspondents. The official logs in securely, takes a live photo of the customer with a white background, and takes the photo of the customer's original Aadhaar card, passport, or other OVDs. Now, the photos must be watermarked. The time, location, official name, employee code should be watermarked on the photos. OTP sent to the customer mobile to confirm the details. Officer verifies the customer. Officer verifies that the photograph matches. Photograph the customer matches with the ID proof, and all form fields are correctly filled. Number four, eKYC. Banks can also use Aadhaar based online verification by signing an agreement with UIDAI. There are certain steps that bank officers enter your Aadhaar number into system. The customer gives fingerprint or iris scan. Bank sends encrypted request to UIDAI. UIDAI checks the biometrics of the customer, and if there is a match, UIDAI sends the name, date of birth, address, gender, phone number, etc. to the bank. Now let's talk about wire transfer. Wire transfer is nothing but sending money electronically. So wire transfer means sending money electronically from one person to another. It can be done domestically, or it can be international or cross border. It's fast and convenient, but also it is risky. It's not only fast and convenient for you, but also the criminals. So it can be misused for money laundering, terrorist financing, or any other kind of financial crime. And to reduce this risk, bank must follow certain rules. Let's talk about cross border transfer first. A cross-border transfer must include clear details of the sender, who's also known as originator. So originator is nothing but the sender of the money. So the name, the address, the account number, or unique ID must be obtained. It is not required if both remitter and beneficiaries are banks. For example, if Mr. A is in India and he sends $5,000 to his brother in US, then Mr. A's name, address, and account number must go along with the transfer. Now, for domestic transfers, for transaction of 50,000 or above, senders full information is required. So, if someone transfers 75,000 by NEFT, the bank must record full sender's detail. If someone is breaking uh, up to avoid the rule, say two transfers of 49,000 each to avoid monitoring. So this is called structuring. So the bank should identify such behavior, and person is uncooperative, the bank should file an STR, suspicious transaction report, to FIUIND. The sending bank must keep sender's information for 5 years. If there is any intermediary bank involved, So if there is any bank in middle of the transaction chain, it must keep all the senders information it forward to the next bank, and if not possible for domestic, still stores information for 5 years. And then there's a receiver's bank. If sender's information is missing, the receiver bank must ask the report. The receiver a bank must ask for the information from the sender bank, and if it is not provided, it report a suspicious transaction report to FIU IND. And if they don't get any help, they may end business ties with the sending bank. Let's talk about other rules. So issue and payment of demand draft first. If someone wants a DD, NEFT, IMPS of 50,000 more, so payment must be done from their account, no cash transactions. Alright, so no cash transaction will be entertained. The bank must print the buyer's name on the DD or pay order. Check validity. Up earlier it used to be 6 months, but now the present validity is 3 months only. So check draft must be presented within 3 months. Account pay check must be deposited only in pays account. There is an exception though. Cooperative credit societies can deposit up to 50,000 in accounts of their members. Money mules are innocent people's account, you can say. They may or may not know what they are doing. Criminals may lure them in the name of, say, criminals advertise that if you want to earn extra money, you can contact us. You will earn, say, 1,000 per transaction done by your account. So criminals use other accounts with or without their knowledge to move illegal money. So this other person account, so this other person is known as money mule. So these people are known as money mule. For example, say there's a student. Okay, my student does not have a horn, so let's remove this horn. Okay, so there's a student and is he is offered a job online and is asked to receive money in his bank account and send it somewhere else. So this is the job that will send you the money and you forward this money to another account. So this particular student is acting as money mule, whether he knows it or he is he is aware about it or not. This person, the student, is acting as a money mule. Now, to prevent this, the bank must follow strict KYC norm, should track suspicious activities, and RBI says that using mule accounts means there is a KYC failure by the bank. As per tax rules, PAN must be collected and verified for certain banking transaction. If PAN is not available, obtain form number 60. Excuse me. Selling third party products. If the bank is selling products of other companies, then the bank must verify the identity of walk-in customer for 50,000 more. It keeps proper transaction records, use AML software to generate alerts, allow 50,000 and above transaction only through bank accounts or check after PAN verification. And banks also provide at-par check facilities to cooperative banks. Now, bank must monitor this facility quite efficiently. Cooperative banks can issue such checks only to themselves, their KYC compliant customers, or walk-in customer for amount below 50,000 in cash. The cooperative banks must maintain proper records, a sufficient balance with the main bank, and all at-par checks must be account pay only. Central KYC record registry, quite important from your exam point of view. Central KYC record registry is like a central storage system for your KYC. Documents like your ID proof, address proof, think of it as a digital locker where KYC details are safely kept so that you don't need to submit them again and again to every bank or financial institution. Now, CKYC CR is managed as Central KYC Record Registry. It is managed by CERC, Central Registry of Securitization, Asset Reconstruction and Security Interest of India. So it is managed by CERC, which is appointed by the government of India. And how does it work? So when the customer opens a new bank account, the bank collects the customer KYC documents The bank then uploads this documents to Central KYC Record Registry. Central KYC Record Registry assigns a unique number called KYC identifier. Uh, when the customer goes to bank B, now the customer has given the records to bank A, and the customer is, now goes to bank B to open another account. So he can just give his KYC identifier now and give the permission to the bank to download the KYC from Central KYC record registry. He does not need to submit all KYC documents again and again. And for individual, KYC data must be uploaded if the account was opened on or after January 1st, 2017, and for companies or legal entities, data upload applies if the account was opened on or after April 1, 2021. For old accounts, data is uploaded during periodic KYC updates, and this upload should be done within 10 days of opening the account. Now let's move on to monitoring of transactions. The bank must ensure that their services are not misused for criminal activities like money laundering. So they are required to report such activities to FIU IND, Financial Intelligence Unit IND, and who does it? Principal officer does this, as discussed under unit number 2. Now what do bank look for? So bank pays special attention to unusual transactions, transactions that don't make any sense. Say there's a student account. This student account suddenly received 25 lakhs. Now, how is it possible? Does it make sense? No. So banks pay special attention to these kind of transaction. If there is any complex or suspicious pattern, so there's round tripping of funds, frequent third party transfers. So bank do keep a check on these kind of transactions. And who is responsible for reporting? Principal officers at the bank makes the final decision of whether to report a transaction as suspicious or not. He is helped by a team of AML analysts who help to investigate the transaction. Even bank staff or audit teams can flag these doubtful transactions. What is a suspicious transaction? A suspicious transaction is one that might involve black money or illegal fund. It seems too complicated without reason, has no genuine financial purpose, or could be linked to terrorism financing. Say repeated small cash transaction just under 50,000 to avoid scrutiny. Now this is a suspicious transaction. Last topic for this unit, record management. So what record must banks maintain? So transaction record for at least 5 years from date of transaction. Customer ID and address documents for 5 years after the account is closed. Our records must include the nature of transaction, amount, currency involved, date of transaction, who was involved, the sender and the receiver. Why is it important? It helps investigation by enforcement agencies. It allows the bank to reconstruct any transaction if required. Uh, how the record has to be kept in digital form or paper form, but it must be easy to retrieve when needed by authorities. So I hope unit number 3 is clear to you now. Let's move on to Macmillan questions. Then we'll do some practice questions. Number 1, customer acceptance policy of a bank should state that the bank will not open an account which is operated by third person on behalf of the account holder. So beneficiary accounts are permitted. So this eliminates option number A. For a professional intermediary for its client also can be opened. In Benami name, no. In Benami name, it cannot be opened. So C is the correct answer for this question. Without a PAN, form number 60 will work. So without a PAN can, without a PAN account can be opened. Form number 60 alternatively can be obtained. Customer identification is required to be done for international transfer of funds of C. The wording. What kind of transfer? International transfer. Not domestic, international, cross border transfer. 50,000 or above, over 50, any value, none of the above. For this particular question, any value. Okay, customer identification is required for any value if international transfer is involved if there is a cross-border transaction. In case of NRIs, for the purpose of opening an account, a copy of KYC document may be certified by NRI himself, no. Employer of NRI, no. Any bank branch, no. A judge, yes. So D is the correct answer for this question. Among the documents stated below, dash is not an OVD. Okay, PAN card, job card, बननेगा, letter by NPR, proof of possession of Aadhaar number. So PAN card is not an OVD. There are only 6 OVDs. PAN card is not one of them. So A is the correct answer for this question. In case of a company which is not listed, any individual with holding more than dash of the total share capital is a beneficiary owner. In case of company, it is 25%. In other scenarios like partnership trust, it is 15%. But in case of company, it is 25%. Hence, option D is the correct answer. Clear till now? Let's move forward to some practice questions. What should foreign incorporated bank branches in India do if there is a variance between RBI's KYC AML standards and their home country regulations? Follow their home country regulations only? No. Follow RBI regulations only? No. Adopt the more stringent regulation of the two, or adopt the more lenient? So, what will be the correct answer? C will be the correct answer. Stringent regulation should be adopted. So, C is the correct answer for this question. Which of the following statements are correct regarding officially valid documents and address verification for KYC purposes? Number 1, a passport is considered an OVD for KYC purpose. Absolutely correct. Number 2, a job card issued by Narega is not considered an OVD for KYC. Not correct. This statement is incorrect. Number 3, so this is correct. This is not correct. Number 3, a utility bill not older than 2 months can be used for address verification. This statement is also correct. A voter identity card issued by Election Commission is an OVD for KYC purpose. Yes, correct. A letter from National Population Register NPR is not considered an OVD. So this is not correct. So 1, 3 and 4 are correct. So correct answer for this question will be option A. Which of the following statement regarding Aadhaar based KYC and OTP based verification for non face to face customer are correct? Number one, Aadhaar number must be redacted on bank account keeping only last 4 digits. So this statement is correct. The customer who is able to undergo biometric authentication due to illness can complete the KYC. Who is unable to go biometric authentication due to illness can complete their KYC with an offline verification or certified copy of OVD, but this process must be approved by a senior official and subject to concurrent audit. This statement is absolutely correct. OTP based Aadhaar verification for non KYC non face to face customer allows the aggregate balance in all their deposit account not to exceed 2 lakh. Is it correct? No, this is not correct. The amount is 1 lakh, not 2 lakh. If a non face to face customer does not complete the normal identification process within a year, the bank may continue operations under the OTP based verification model. This statement is absolutely incorrect. So, this statement is not correct. Number 5th, a non face to face customer declaration must confirm that no other bank or financial institution has opened an account using OTP based Aadhaar verification. So, banker, is it correct or incorrect? So, this statement is correct. Yes, this statement is correct. So, 1, 2 and 5, option B provides statement 1, 2 and 5. So, option B is the correct answer for this question. Let me just erase this. Question number 4. What is the maximum amount of foreign remittances that can be credited to the NRO account of a foreign student before the local address is verified? It is USD 1000 not exceeding 50,000. So option A is the correct answer for this question. Question number 5. Ravi, a daily wage laborer, lives in rural area and does not possess any OVD. Okay, he needs to open a savings account to receive government welfare benefit and manage his earnings. He approached a local bank and the bank informed him about the facility of small account under the financial inclusion initiative. Ravi is excited about the idea of having an account without needing any OVD, and he plans to use the account to deposit his monthly earning and government welfare benefit. However, he is concerned about the limit imposed on such account. What is the maximum amount that Ravi can deposit and maintain in his small account, and what is the maximum balance allowed at any given point of time? So, maximum amount that can be credited, number one, and balance that is allowed to be kept. So, he can deposit up to 1 lakh and maintain a balance of 50,000. So, option A is the correct answer for this question. Ravi can deposit 1 lakh and maintain a balance of 50,000. Which of the following statement about wire transfers are true? Cross border wire transfer must include the originator name, address and account number, or unique address number. Absolutely correct. Domestic wire transfer up below 1 lakh do not require an originator information. This statement is not correct. Because transfer above 50,000 needs originator information, so this statement is not correct. An intermediary bank must ensure that originator information is retained and transmitted for cross border transfers. So this statement is also correct. So option C, statement 1 and 3 are true. Which of the following statement are not correct regarding the regulations for mitigating money laundering or terrorist financing risk in banking operations? Number one, demand draft mail transfer on a transaction of 50,000 above can be processed through cash payment. No, they cannot be processed through cash payment, making this statement incorrect. The name of purchaser must be included on the face of demand draft, pay order, or banker's check as per RBI's regulations. So this statement is correct. Yes, this is correct. Cooperative bank can collect account pay checks for any individual regardless of their relationship. So this line particularly makes this statement incorrect. We need not to read further. A money mule is an individual who transfer funds to account on behalf of criminals, often recruited through misleading job advertisement or social media. This statement is absolutely correct. In case of an account being operated as a money mule, the bank is deemed to have complied. No. So this statement is incorrect. Agar this is operating as a money mule, then the bank is deemed not to be have been complied with KYC guidelines. Transactions involving 50,000 or more by walking customer in relation to sale of third party product must be done only through a debit to the customer account or against check. This statement is correct. Cooperative banks offering a par check facility to their account holders should ensure that all transactions of 50,000 or above are carried out through cash payment. Again, it should not be through cash payment, making this statement incorrect. So, 2, 4 and 6 option number D will be correct, but the question is asking us for not correct statements. So 1 is not correct, 3 is not correct, 5 is not correct, and 7 is not correct, making option D as the correct answer. So option D is the correct answer for this question. Which of the following statements regarding the central KYC record registry are correct? CKYCR is authorized to receive, store, safeguard, and retrieve KYC records in digital form. Yes, true. So this is correct. Banks must upload KYC data for individuals account open on and after 1st January 2017. This is also correct. Bank must upload KYC record for legal entity account open on and after April 1st to 2021. This statement is also correct. KYC information must be uploaded within 30 days of account opening. No, it should be 10 days, not 30 days, making this statement incorrect. So, A is the correct answer for this question. Which of the following statement regarding transactions Monitoring by bank are correct. Bank must report all transactions involving large amount of cash to FIU IND regardless of suspicion. No, only suspicious transactions should be reported. So this statement is not correct. Suspicious transaction can be identified not only during transaction execution but also during customer onboarding and solicitation of new business. This statement is absolutely correct. The principal officer assisted by AML analyst is responsible for deciding whether to report a suspicious transaction to FIU IND. Yes, it is the principal officer who can decide who is responsible. Only branch level functionaries are involved in transactions. Transaction monitoring with no role from corporate or zonal office. This statement is not true. So this is not correct. The definition of transaction under PML include activities such as account opening, fund transfer, fiduciary relationship, and use of safety deposit boxes. This statement is also correct. So 2, 3, and 5 are correct, making option A as the correct answer. Which of the following statements are correct as per the provision of PMLA and PMLR regarding record management by banks? So bank must maintain record of transaction both domestic and international for at least 5 years from date of transaction. Yes, true. Customer identification record and address details must be preserved for at least 3 years after the business relationship ends. No, it is 5 years, not 3 years. Making this statement incorrect. So this is correct. This is not correct. Bank must ensure that identification record and transaction data are made available to competent authorities when required. Correct. A system must be introduced for maintaining proper record of transaction as prescribed under Rule 3 of Prevention of Money Laundering, Maintenance of Record Rules 2005. Correct. So 1, 3, and 4 are correct, making option B as the correct answer. That's it for today's class. I hope you learned all about unit number 3. If you have any doubts, you can ask freely on our Telegram group channel, JAIIB CIB Prep. We'll meet again with unit number 4. Till then, take care, bye bye, and thank you for watching this session.